everyone to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Good morning, everyone. Good morning, Sip.
Beautiful January 28th, cold all across the country. The markets are starting to get exciting. What are you looking at?
Well, first I have to say it is cold, and so whenever it's cold, we start to roll out the humidifiers here at the Brown household, and so that's what it does to my hair. I get curly hair. So if anybody's wondering about what's wild happening, it's right on top of my head. No, listen, the big thing is we've been following for over 5 years in my full-time options trader group. These guys have been following Activision, and Activision got picked up by Microsoft. So we just lost a ticker out of our hot list, but it's an interesting purchase, right? Because Activision, that I think that's the biggest merger and acquisition that's been on history. So I'm going to be watching that carefully because Microsoft is on my full-time options trader watch list as well. So we're going to see what happens there.
Yeah, and as a gamer, it's interesting. Microsoft owns Xbox. Activision makes these amazing games, and now you're putting them under one roof. Probably not a bad move for Microsoft, but Microsoft might be getting too big. I don't know. Is that a thing?
I mean, it was a thing in the 90s. I mean, Activision's been around since Atari years, right? I remember when I was a kid gaming on Atari 2600, Activision had the famous Pitfall name, right? And so we played Pitfall on our Atari 2600. So Activision has been around. They reinvented themselves on the new gaming platform. So it's interesting that they took the buyout after all these years. I'm talking 40 something years that they've been around.
Yeah, interesting. All right, so that was a big M&A story. We
Yeah.
also had some Fed news this week that seemed to rattle the market a bit.
Yeah, so if we take a look at our economic calendar, I'm going to go ahead and throw my economic calendar on the screen. I have it zoomed in right into the Fed announcement. So the Fed announcement didn't at all, right? They didn't change interest rates. They didn't change how much treasuries they're buying. They didn't change how much mortgage securities they were buying. So nothing changed. But the big thing is they had their announcement afterwards, had their press conference. This is where Jerome Powell got in front of the press. And whenever the Fed speaks to the press really looks for key words, right? It's almost coding. And this Fed, a lot different than the Fed from 20 years ago when Alan Greenspan was running things. They want to be as transparent as possible. No mysteries, no surprises. So they kind of laid it out there, but with some disclaimers. They basically said at the next meeting in March, they're going to start raising interest rates and they're going to start lowering the amount of stuff that they're purchasing, right? Starting to taper off this purchasing. So no more, $20 billion of injection of money all the time. So that caused the market to have a little bit of confusion going on. Something just fell down right behind me.
Yeah,
That was
I think
awesome.
it's okay. And then before the stream, I was basically asking you, well, we can't go any lower, right? The interest rates are as low as they can be, and so it's just a matter of time. It's waiting. It's one of these meetings, it's going to go up, and then one of these other meetings, it might go up, by 2 basis points, right? Like.
Yeah, it's been zero for a long while. They started to do small point increases, I think around, if I remember correctly, 2017, something like that. And then it went back to zero as soon as, the proverbial poop hit the fan. So, the market always reacts to tightening, but it always reacts in advance so that by the time tightening comes, it's already digested. The only time, during a Fed announcement that the market, gaps in one direction or the other is if the Fed does something surprising, like you just mentioned. Instead of expecting it to raise interest rates by a quarter point, they actually raise it by a half point or something like that. That causes a lot of, and I don't think this Fed's going to do that. This Fed is very Wall Street friendly. Jerome Powell, he's been pumping up Wall Street for a while. So I don't see that happening. I see him playing exactly the way he said. But he did put a disclaimer in there, and he said, I'm going to just, continue. This is our plan, but our plan can change.
Yeah, and we never know why. Geopolitical, you
Yeah.
know, the whole crypto wave, right? I know the Fed and some government officials have talked about it because it is becoming more mainstream. But in that thought, mainstream in the sense of, does it go with the market? Does it go against the market? What are your thoughts on that?
Is it an asset, or is it something that you invest in, or is it something that is a currency? And that's very confusing. In fact, the Fed made an announcement that they want to think about a digital dollar, which would act. I don't know how it would work, but it's a little different than going through Visa and MasterCard. If you think about Visa and MasterCard, when you do a purchase, the merchant doesn't get that money that you just transacted with them for a few days, because MasterCard and Visa have their proprietary way of validating the purchase, and it takes a couple days, and they take a couple of percentage points. And the whole beauty behind the blockchain is that the transactions are instantaneous. They're not held by one company. Your privacy is secured, and the money goes, like I'd said in the first bullet point, instantaneously. And that's kind of, I think what's interesting is that it's been revived, not just here in the US, but in many. I think what I read was something like 30 different countries are considering digital currencies, which basically means it's a dollar, but it's not a paper dollar. And I almost wonder if the other countries will adopt that faster, because the US, with their whole privacy things, people sometimes don't, they like to just use the dollar, right? They don't want to have any sort of digital fingerprint. And the beauty behind things like crypto is that that has been spawned not by a corporation, not by a government, but by the actual internet users themselves, right? There's internet users like me who mine it, that we do the validation. But yeah, it's so interesting right now that we're seeing a sell-off of crypto. We're seeing a sell-off of commodities like gold. Um, it's almost as if during 2021, we had so many novice investors join in on the trading, and they don't quite understand that some of these things like gold have traditionally been where you put your money when you're afraid or of risk in the markets. So that's what we usually see. We see bonds and things like gold and silver go up when the market gets kind of unstable and people want to move their money from one investment to another. But what we're seeing is a pulling out of this investment. And this almost tells me that that money that's being pulled out right now, and it's being pulled out across the board. We're seeing crypto get pulled out. We're seeing golds. We're seeing everything, money coming out. I almost feel like that's like play money that investors had in 2021, and they're not interested in keeping that money making money. That's some. Oh, go ahead.
Well, I was gonna say that's the beauty behind what you do with options trading, is
Mhm.
that it's not about going straight up, it's not about going straight down, it's about finding opportunities. And the retail market tends to not try and make money when the market goes down, but they certainly have the capacity and the capabilities and the tools. They just need to understand the strategies.
That's absolutely right. And I always worry about that. When the market turns down, trading trainer, we sometimes see, students decide to pull out, and, because they get caught up in the hype of, hey, it's no longer working, and they forget that we're dealing with options. And the folks that actually stick with us, right, whether they're selling premium or doing other strategies with us, like the full-time option traders, those folks always wind up making money hand over fist during downturns. So the key is if you get into investing with a security that makes money, whether the market's going up, down, sideways, and on other variables as well, like time passing by, like all of our premium sellers, or even on the fear or confidence of the market, options are very multifaceted. And so, if that's what you've decided that you're going to be investing in, then you're in the right place.
And with that note, we're going to go ahead and move into one of the examples that we'll go over. But before we do that, we want to invite everyone to go check out the workshop that you've put together, where you put some of these introductory strategies, tips, education. So let me go ahead and play this little teaser for everyone and encourage you all to go check it out.
Roll the clip.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So we've gone ahead and put the link in the comments if anyone wants to go check that that webinar out.
That's our premium selling workshop. And so premium selling is not only something that you can do when the market goes up, down, or sideways. Premium selling is also very high on reward and very low on risk. But here's my favorite part about premium selling. It doesn't require like day trading efforts. The efforts are very low. For each position we have with premium selling, we probably do maybe 2 to 3 transactions per month. None of this stuff of sitting in front of the computer. So if you've got the lifestyle where you don't want to be glued to your computer screen, learning about premium selling this is what you want to do right now with your time.
And we've got a bunch of lovely setups, ideas that you're working on. And this is one of the hot ones this week that you've identified.
Well, this is the S&P 500. And so I always like to start before I get into any of my symbols. I always like to get an idea of what the broad market is doing. And I like looking at the S&P 500. Previous times in this show, we've talked about how, a lot of the talking heads talk about the Dow because that's always been exciting. But the Dow represents 30 industrial stocks. It's kind of like if you think about a place like the UK, the Dow could be like the king or queen of a place, and the S&P 500 is the prime minister. The S&P 500 most represents the candidates on our watch lists. And so the S&P 500, we've been watching it. We watched very carefully that little wedge pattern we've been talking about, and we were a little worried about that. Last week, it broke down out of that wedge pattern. And so we had these levels of different horizontal support we were looking for. And we're actually looking at this 4,300 area. And it seems that that's holding okay. And so that gives us a little bit of comfort. We don't know if we're in a downtrend. A lot of people saying, oh, shoot, the ceiling is falling. That's not true. We don't know if we're in a downtrend until we have one retracement, a range contraction and move on. And we actually establish for ourselves with 2 lines of support and 2 lines of resistance that we're actually in a downtrend. This is just basically, a test. At this point, we have to let this mature. And in the meantime, we have to be nimble on our toes. Now, one of the things I like to do is look at companies, and you guys know this. I like to, especially when we're in kind of questionable times like this, like what's going to happen next, I like boring companies. And one of my favorite over the years has been Huntington Bank. I've been trading premium against Huntington Bank for, 15 years. Huntington Bank is one of those ones that's very boring. One of the things I like to do with any symbol, by the way, is we've talked about in the past, correlation. I like to evaluate correlation. And how would I do that? One of the easiest, I'm not saying this is the only method or the best method, but one of the easiest and fastest things to do is simply put the S&P 500 up against and compare So you'll notice right here, I'm using compare with. I'm going to put the S&P 500 right on this chart. The S&P 500 now is represented by this purple line, and I'm going to see, are the movements the same? In other words, one of the things I can do, and one of the things I do, and yeah, I just said do, is I'll change both of these things to lines. And so what I'm looking for is any sort of agreement with movements. And you can see that there's, when the S&P 500 dips, I guess Huntington Bank dips. In all reality, this curve is so much different than Huntington Bank curve. This curve has been losing money, gaining money, and Huntington Bank just is going sideways. So I'm actually looking for not as much correlation to the S&P 500 at this moment, because the S&P 500 at this moment has uncertainty. So I'm looking for symbols that don't have the correlation and instead are just kind of boring, marching to the beat of their own drum. So I wanted to feature Huntington Bank because Huntington Bank is coming on down here in our channel. First of all, if I zoom out a little bit, you can see that Huntington Bank has been almost for the last 10 months in this ever so slight ascending trend. And when I say ever so slight, 10 months ago, the middle of our trend was at roughly $15.10. And now it's at $15.60. So it took 10 months to go up about 50 cents. So it's ever so slight. And this is a perfect one to be trading premium against. I'm going to go ahead and go to a more traditional line on our open, high, low, close bars. You can see earnings. Huntington Bank is one of those candidates that does react to earnings. And so we want to be aware of that. But we just had earnings about 5 days ago on Huntington Bank. So we're good for the next 3 months. So looking for an opportunity for Huntington Bank to kind of bottom here. It is, as we mentioned, an ascending symbol. So Huntington Bank, I think, let's take a look at the option chain. There are some back month options, but I'm not sure how much, there's not very much liquidity if you go deep in the money. And that's what we want to do if we're going to use a back month option. We'd like to go as deep in the money as we can, ideally getting it to trade at parity. And so because there's so much lack of liquidity on Huntington Bank, I almost feel like what I want to do if this bottoms out is just buy some stock. And I want to keep the risk to my portfolio at a minimum. I always give these numbers, and these numbers are just from teaching for the last 20-something years this trading methodology and seeing in my students' portfolios. If you have a portfolio that's less than $5,000, let's keep the risk to our portfolio for any one position to being less than 4%. Now, if your portfolio is at $25,000, somewhere between $5,000 and $25,000, let's knock that down. Let's only risk 3% of our portfolio per position. If your portfolio is from $25,000 to $250,000, let's knock it down again to 2%. And if you're dealing with a portfolio over $250,000, let's knock it down to 1%. Now, even if you have a portfolio at $5,000 or less and you're risking 4%, you'd have to do 25 trades in a row to obliterate your portfolio. None of this stuff where people have come up to me and said, hey, I did this one trade and I lost not only all the gains that I had made over the past year, but half of my portfolio. Remember, successful traders manage their risk. So keep that in mind. So when we buy our stock, we only want to buy enough shares based on wherever we put our risk stop loss order so that we're not risking more than whatever percentage of your portfolio. Never go above risking 4% of your portfolio in any one position. So keep that in mind. So I'm thinking about buying some shares of stock. And then as this moves back up in the channel, once it gets above the center of the channel, and ideally once after it has found a top, I would go ahead and do as we've always been talking about. I'd buy a protective option. So I'd buy an option that's 3 to 6 months out in time, probably down here at the $14.50 or $14 strike price. It would act as my passive protection. But I would also sell my premium. I would sell my near term at the money option so that, as we've been pointing out, every third Friday of the month, if we're doing monthly options, or if you're doing weekly options every Friday, we have the opportunity to collect some premium.
Wonderful. So that's Huntington Bank, ticker symbol HBAN.
Yeah.
We'll keep an eye on that in the coming weeks. But another thing that I noticed, it's got that lovely price point of under 20, 15 to 17 that really works well with a lot of these strategies.
It's affordable. And remember, if you're doing any sort of option strategies, options come in lots of 100. That means 100 shares per contract. So you have to do everything in lots of 100. So if you're talking about something that's like this trading at $15, you're talking about buying at least 100 shares. So $15 quickly becomes $1,500. So Huntington Bank is one of those candidates where you need to have some dollars.
Totally. And so in this next part of the show, I know that you did a live stream yesterday or the day before, Tuesday, and part of the show was throwing out some ticker symbols, and so we encourage anybody that's watching during the live stream or in the follow up to throw some of those ticker symbols into the chat that you are looking at, that you have an idea on, and we'll go ahead and get AJ's opinion. And I know that you have a few that you want to go over from that that series basically on Tuesday. And there's some interesting names. I think we're going to start with Wendy's, which is something we've been looking at and we looked at in the last show.
Yeah, absolutely. So Martin from the United Kingdom wrote in to me and was asking me about my Wendy's symbol, right? And his main question was, hey, how deep in the money do you have to go? So I actually have a quick little thing that we can do here. Let's go ahead with something that has a lot of liquidity, like the S&P 500 ETF. And again, I'm going to compare this. So I'm going to put on the same chart, and I'll go over to a line on close chart for ourselves. This is the SPY, right? So you can see what the SPY price action is doing. So one of the things is we like to go deep in the money. And the reason why we like to go deep in the money, if I take a look at the option chain for the SPY, let's go ahead and we'll just look at the most near-term option. The deeper you go in the money, you'll notice that this intrinsic value column gets higher and higher and higher, and this extrinsic value column goes to 0. And the intrinsic value is what locks the price of the stock to the price of the option. And so if we can minimize this extrinsic value to as small as possible, then the underlying symbol is going to move with the stock. So if you can get the extrinsic value down to nothing, that's the textbook definition of trading at parity. Now, with my premium sellers, we try to target 5% or less of the value of the price of the option. If it's 5% or less, it still is pretty close to trading at parity. And if you think about it, when you set your back month options to trading at parity at 5%, when the underlying symbol moves up and down the channel, it's going to change, right? It could go as high as 10 or 15% and as low as 0, right? It could go to the textbook definition. So say, for instance, I find one of these symbols trading. Let's take a look at the 400 strike price. So what I'm going to do is I'm actually going to steal this symbol. So I'm going to come over here and I'm going to right click. I'm going to copy that symbol name and I'm going to go back to my chart and I'm actually going to chart the symbol over this. So I'm going to click on Studies. I'm going to click on Add a Study. I'm going to click on Compare With. I'm going to go Custom here, and I'm going to type in this symbol, right? That's the option. And so now you can see I've overlaid the options price action with the S&P 500, and you can see that it's pretty much movement per movement, but you can see that the movements are bigger. That's what's called leverage, right? But we aren't having any kind of unusual movements. The option is basically trading in the same exact shape. And you'll notice over here, we have a scale to the left that is much different than the scale to the right. That's because we get the same movements, but at a much cheaper price. And so that's what it's all about. We like to pick those options trading at parity because we want to analyze the same exact movement. That when you get options that aren't trading at parity, that extrinsic value component gets affected by just about everything. We call that the emotional component of an option price. And now the link between the underlying symbol and the option is not there. And so one of the things you can do, again, this isn't the best way to do it, but you can overlay your option to your chart and see how well they agree. And you'll see if you do an at the money or even out of the money option, there's no agreement at all. And then the risk modeling becomes almost impossible. With that said, one of the things that us option traders run into a lot of times, with Wendy's especially, is that question that we were talking about on Huntington Bank. There's no liquidity, and sometimes you have to make this compromise. And if you have the ability to make that compromise and be able to analyze it, then that's what you're going to wind up doing. So I go out when I'm finding a back month option, I go out longer in time than I expect the position to last. So in this case, I went to the January 2023, and for the put, I wound up going with a 30. Now, if you take a look at the 30 and I take just a simple math, we were talking about the percentage of extrinsic value. Let me pull up my calculator here. And so with the 30, as of right this minute, we've got 65 cents of extrinsic value, and the price is $8.45. So 65 divided by 8.45. Sorry. 65 divided by 8.45. Okay, what's happening here? Oh, I know. I don't have the num lock on. 65 divided by 8.45 gives me 7%. Now, when I actually purchased this back month put option, it was up around 10 or 11%. And this thing's been oscillating between like 5% all the way up to 15%. And I made that decision. I had a couple of different analysis tools that my full-time option traders and I use to justify my trade on the 30. But you'll notice there's a lot more liquidity. There's already 46 contracts out there that are traded, at least in the open market. And when I started to go, for instance, to the 35 or the 40, the 35 or the 40 had no contracts. Then there was, even though it was by our definition trading at parity, not the textbook definition, by the way, you can see that the extrinsic value hasn't gone to zero. But by the premium selling definition of 5% or less, those were trading at parity, but they indeed didn't have any liquidity. There's another benefit of using a back month option, especially on a covered put. When we substitute the back month option on the covered put, we can turn a margin trade into a cash trade. So I was really eager to have a cash trade on this particular Wendy's. And so let me summarize everything I just said. In summary, we'd like to have something trading at parity. We don't necessarily need to go to the textbook definition of trading parity where there's zero extrinsic value, but we'd like to target 5% or less. And we do know that by going with even 5% of extrinsic value, that back month option, as it moves up and down in the channel, that's going to vary. And we take that because we know that there's still a pretty tight agreement, even with those few percentage points of extrinsic value. We know there's a tight agreement to the underlying symbol price. We have to be very careful when we start to go deeper in the money. I would never use, unless I was consciously doing something like a calendar spread, I would never use something closer to at the money as my back month option. It's just very, very difficult to analyze. And the amount of returns I can get back on the trade is not significantly more than the effort I have to do into analyzing and planning the trade. So that's a great question.
Hopefully we got that answered. Let's go ahead and run through some of these other ones that have been brought up this week. I think the next one is SLV. Is that correct?
Yeah, SLV. This is the silver ETF, and I have to give a shout out to Patrick from Singapore. Patrick sent us a question about the SLV symbol, and he said, "Hey, what are your thoughts about the SLV symbol right now?" And I've been a fan. This is an ETF that follows the silver price. I've been a fan of trading this guy. Again, it's been on my watch list for years, and especially this January. As we take a look, silver does have some overnight gapping. A lot of people around the world trade this ETF, so they trade it during after hours, and options don't trade after hours, at least not American options. And so one of the drawbacks is when the market opens the next day at a different price, your option can change price drastically. But that's where, if you're into the premium selling, and we have that workshop where you can get an introduction to premium selling doesn't necessarily, we're working more with the fact that options make money as time passes by. We sell options, and it's called theta decay optimized options. And so we don't really care so much about the gapping so long as it doesn't gap out of the channel. And so silver's got this reliable pattern. It's coming down bottom at about $20.50. Once it establishes that $20.50 is its bottom, I'd either be buying some of this ETF, or I'd be buying some of those back month options trading close to parity. And what's beautiful about ETFs is there's a lot of liquidity, which means you'll probably be able to find some back month options that have some, activity on it as a substitute for doing the underlying symbol. So Patrick, get ready to buy some SLV or buy some back month options trading at parity.
There you go. SLV. Next one is Cisco.
Yeah. This came from Bill. Bill was writing to me from Wyoming here in the United States. And Bill just wanted to know about my thoughts on Cisco. Cisco also is a real nice one. It's at a higher price. So remember, the underlying symbol is around $54 right now. Again, it's coming down for a bottom. If it tests $54 and then starts heading back up, we want to buy some Cisco or buy some month options. This is, we've got, let's see, if it tests at 54, we'd have 2 tests of support. We wouldn't have 2 tests of resistance yet. So, Bill, another thing, if you're a little bit cautious, maybe this is a perfect opportunity to do some paper trading on Cisco. Plan out your trade. Once it bottoms, consider paper trading some stock or some back month options, and then see if we test resistance again up here at $64 or even $62, and if this could be a good premium trade. If you're not as cautious, which I'm very, very cautious, most people who are in my program know that I test things 8 ways to Sunday before I put my real money portfolio on the line. But if you buy some of the stock or the back month option and it goes on even past, like it has been in an uptrend, if it passes $64, $66, then just consider it a directional trade, cash out, right? So Cisco, I'm a little bit cautious on just because it hasn't fully matured into a sideways channel. So, tread lightly, Bill.
Yeah, and it's a high tech name, so you never, there's a lot of noise that just comes with those tickers.
With tech stocks. Although I have to say, since Cisco is, they dabble in the consumer market with, I guess, the Linksys router line. But you think about the backbone of the internet, and it's almost like they don't have any flash. They've kind of moved into being those boring stocks. So I kind of like Cisco or even some of the wireless carriers because they're getting more and more to becoming the backbone with all their 5G service. Of course, we'll have to talk about 5G and the airlines on a future show.
Totally.
But
And
yeah,
then we've got one last symbol to what is this? Panamera? How do you say that?
Pan American Silver Corp mining, I think. So Pan American Silver Corp. Let's go back. So this is Steve. Steve is in Calgary, Canada. Hi, Steve. So if I take a look at like a 2-year chart, for the longest time there, Pan American Silver was perfect for selling premium against. And if you got into it at that time, where you were constantly selling the premium, what's nice about that is as you go on with your trade, we talked about this in the past, each time you make that instant dividend and each time you roll out your protective option, you make a little bit of a reduction in your break-even price. So if you think about it, even if you didn't get in there in the beginning, if you got in here over here, by now your break-even price would be very low. And so switching personalities and even maybe having a couple of months where you falter as this underlying symbol is deciding what its new personality is, you'd be buffered because you would have been in the trade for a while. But now Pan American Silver is somewhat trying to figure out what its new personality is. It's a little bit schizo. And so it's currently in this downtrend. Let's go ahead and zoom into the most recent price action. I want you guys to understand how important it is to take a step back and look at the history of the symbol, because if you're just staring, and I constantly am warning both my full-time option traders, my accelerated program traders, my premium sellers, to not get caught up looking at the tip of your nose, because you're going to miss a whole bunch of the history. If I'm just looking at the 6 months, I would think that, hey, this thing has got a new personality downtrending and I should trade it. My knee-jerk reaction for you, Steve from Calgary, is let's see if Pan American Silver stays in this downtrend a while or changes personality again like it has been. Paper trade it, but I think that this one's going to be a little bit more difficult to follow along than there's easier lower hanging fruit to trade. This one's going to require a little bit more effort. That's my knee-jerk reaction.
Ooh, lost my mouse there. All right. So those are some inquiries that came in this week. And as always, if anyone has any specific tickers, ideas that they want to throw out, feel free to drop them in the comments, and we'll try and answer them there, or we'll just bring it up on the show and hope you hit that subscribe and follow button, because we love the ideas, and AJ is only one person, and how many tickers can you look at, right?
Yeah. So where do we simulcast this show? We simulcast this show through YouTube. We also do Facebook and Twitter. So we've got groups of people who are watching this live on all three of those platforms. So whichever platform you're on, if you haven't already, like Sip said, hit that subscribe button, right? The more you subscribe to us, the more we beat those algorithms and we get this out there. The whole purpose of this show is that we introduce the general public to options trading and how easy it could be. Of course, I want you to get introduced to my company, Trading Trainer, and me, and maybe you'll come and follow my workshop, get interested in premium selling, get interested in all options trading. But for the most part, we're doing a public service here. We want you to see how easy it is. It's just two guys bantering.
Yeah, and one is a super pro, and the other is gonna be a pro by the time we're done with this, I guess.
Yes. Yeah. Cool.
All right. So I went ahead and threw the link to the workshop into the chat. So if anybody wants to go ahead and check that out, you can do so at your leisure. And then you'll learn about AJ and all the different courses and the groups and
Yep.
stuff in there. Otherwise, you know, we're gonna be heading into the weekend here, the last week in January. And I have some good news on my front, AJ, that maybe we could close the show out with.
Let's hear it.
Seeing as you just had your first child, my sister this week gave birth to my nephew now. So I've got a little nephew in the fam, and that brings, you know, joy to my heart because I've been seeing all the cute photos that you've been posting, and so now I got some of my own.
Yeah, it gets weird because I would have never thought I would be that guy who posts photos of babies on internet, and here I am doing it at least twice a week. But it's cool, man. You're gonna like it.
Yeah, and yours is getting bigger by the day, so that's exciting to see.
Yeah, it is.
All right,
very
everyone.
Cool.
We'll catch you next week.
Thanks. Bye, everybody.
Signing off.